Good morning, ladies and gentlemen, and welcome to the MindGym PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, we'd like to submit the following poll, and I'm sure the company will be most grateful for your participation. I'd now like to hand over to CEO Octavius Black. Good morning.
Hello, welcome, and thank you very much for choosing to join this talk about MindGym PLC, which of course we weren't when we started in my kitchen almost 22 years ago. My name is Octavius Black. I'm the CEO and co-founder, and we have built this business up into a glorious new adventure, which I shall share with you shortly, raising it from the start in 2001, and floating on the AIM stock market in 2018. We are a behavioral science business. Now, what this means is that we look after organizations who are looking at how do you improve and increase the performance of their people. And traditionally, this has been done using hard power, pay, benefits, or threat of job loss. And where we come in is using soft power by appealing to the core psychological needs that we all have, the need to feel cared for, to need to feel noticed, to feel that our work matters. And increasingly, organizations are realizing that hard power has, if so much as it ever had a great effect, it is diminishing. And what people need is soft power. But their concern to date has been, how do I harness soft power and how do I know that it's going to work? And what behavioral science does is it helps us understand, using controlled trials and peer-evaluated research, what kinds of reactions you get to what kinds of stimulation. And therefore, what can we do as employers and large companies to shape the culture, to change the way we lead, to alter a whole range of dimensions around inclusion and ethics and well-being in order for people to want to choose to work here and to flourish while they do, therefore increasing productivity and performance. So that, in a nutshell, is the overview of MindGym as we enter our 23rd year. My name is Octavius. I'm joined today by Dom, who's our Chief Financial Officer, and we will be giving you an overview, first of all, of the market and the business, secondly, of our trading results, and thirdly, and most excitingly of all, of the strategy and our opportunity to create a really market-redefining proposition. So I'm going to go straight into talking a little bit about the market, which is vast for human capital management, as it is sometimes called. It's almost certainly in the trillions of dollars. We've put down here the corporate learning and development market, which is in the region of $370 billion, which is larger than the GDP of New Zealand. It is a massively disaggregated market. There are no market players with as much as 1% of the market. There are more learning and development and HR consultancies in the UK than there are hairdressers. So you give a sense of this massively disaggregated market, which is still predominantly live, predominantly delivering workshops of one sort or another, either live in person or live virtually, but with a growing presence for digital. And what there is in the by and large in the marketplace is people who either provide live or provide digital, but don't necessarily integrate them together, which is the first clue for where we may be going in sharing with you our strategy. But before we get to that, a brief story of our financial results. Up until COVID hit in February 2020, we had a CAGR of 20%, and as you can see, healthy profits. We were, of course, affected by COVID in much the same way as all businesses were, as our clients focused rightly on the priority of operational effectiveness and moving large numbers of often white-collar workers from offices to working from their homes and much else besides. But we're really delighted that last year we bounced back ahead of our pre-COVID level, and we are absolutely on track this year for returning, at least broadly, in the direction of growth that we had previously enjoyed. So we are rebuilding the business and developing it and changing it at much the same time. We have continued to invest in growth, some of that through OPEX, quite a lot of it through CAPEX, and we'll explain how that works. And we will also be cash positive. We have no debts at all, though we have a lovely facility just in case of another rainy day, God forbid, and we are in a healthy financial situation. So a bit more about what it is that we do. Firstly, we publish research that is proprietary, developed by our own team of psychologists on the key issues of the day, matters that all organizations are facing, but don't quite know what to do in order to have the biggest impact. So we take, for example, performance or performance management. We've written a research paper on reinventing performance management, how to achieve more with less forever. And we do that not by changing the performance management system or the rating scales or all the things that companies tend to look at, but by identifying the 6 conditions for high performance: the sense of purpose, feeling that my work matters, or the sense of growth, that I'm mastering skills that are important to me. And then we help organizations in order to develop those conditions as much as possible for as many people as possible for as long as possible. We launched much of this work with Microsoft when they originally removed ratings a decade ago. We've since used the intellectual property for a wide range of organizations, from Maersk to MetLife to Lloyds Banking Group recently, and to many others who have seen the power of behavioral science as a way to generate performance improvements and indeed more contented and engaged employees. The same thing applies to diversity, equity, and inclusion. It was 10 years ago that we originally said that unconscious bias training was suspect and probably wouldn't deliver the results that people wanted. And we've come up with alternatives and shown how, using our 4 cornerstones, that you're far more likely to reduce polarization, increase inclusion, and harness the dividend of diversity of employees, diversity of thought, and diversity of experiences. So this is where we start, a unique IP showing, as a behavioral scientist, how you would deploy your resources in order to achieve outcomes that are important for you and for the talent in your business. The next thing we then do is productize that behavioral science in a range of experiences. Some are live, some are digital, and some are digitally enabled. They're virtual. So we created 90-minute workouts and slightly longer things, sort of ones called Go Larges, but for large audiences, that are delivered by our certified coaches, who are all associates, but are certified in Mind Gym. And they are in 40 countries across the world. And we run up to 500 live, either in-person or virtual courses a week. And these are all complemented by digital e-workouts that are usually SaaS or commercial arrangement, a library of 70 or growing to about 100 that are available to download and self-serve. And then we've recently launched, and we'll tell you more about that in a moment, our one-to-one offer. So this is about coaching, but again, not coaching as people have known it. We've done the research to show what impact on performance most coaching has. And the answer is it varies a lot, but the average is quite low. But we've also done the research to show what coaching would make an enormous difference. And we developed a new methodology called precision coaching, and we'll be bringing that to life shortly. And that's delivered through our new digital platform, which supports our product Performer. And then behind the scenes in all of this, we have a library of unique assets, and no one's expected to read these off the chart, but it's to give you a sense of the range that's involved, from relaxation techniques and sorting for stress, to inspire and motivate, to creativity for logical thinkers and courageous conversations and great feedback and business brain, and many, many more. And these are IP that we've generated. They are formed as existing workshops, usually bite-sized, 90-minute, sometimes the 60-minute Go Larges. And they're designed so that anyone in the network of coaches who's trained in it can deliver broadly the same experience anywhere in the world, but adapt it culturally. So if you want to run Influence and Persuade in Missouri, Manila, Manchester, and Mombasa on the same day, you absolutely can, and many multinationals do. And that the course will be broadly the same with the same outcomes, but will be adapted to local circumstances by the live local coach who makes that relevant and brings it to resonate. And so that becomes the core of the business is today. Live workshops, diagnostics, digital workouts, and also we wrap around it a series of customizing potential with our team of psychologists and graphic designers. So that's the core of the business. I'm going to pass over to Dom now to talk a little bit about the half-year results before I come back and tell you a bit about our exciting strategy.
Thank you very much, Octavius. So it's nice to meet you all. To briefly introduce myself, I'm the CFO at Mind Gym. I've been here for just over a year now. My background is Unilever Reckitt Benckiser. I've spent time as a finance director over in the States, working with a sales organization there. And I've spent the last sort of 7, 8 years now in the technology sphere, primarily with Just Eat and Money Supermarket. But onto Mind Gym, which is the most exciting business I think I've worked in. This year, we've had a great year operationally, strategically, and I'm going to take you through some of the financials now for the first half. So in the first half, we've seen revenue growth of 11%, and that's 2% in constant currency terms. What we've seen throughout the half is improvement and progression. So at the start of the year, we had the impact of Omicron, which particularly towards the end of the previous financial year had reduced the number of meetings we could have, which had pushed out some projects. And that led to a -2% decline in the first quarter. Q2 has shrugged off most of that, and we saw growth of 6%. And as we head into the second half, we're anticipating much faster growth coming through. One thing that I think is quite important is the FX impact in that number. So the difference between the 2% and the 11%. That very much feels like it's a long-term impact. And obviously, from a sterling perspective, that's quite a significant benefit to our business, which we weren't seeing last year. Very importantly, you'll see the return to profitability there. So EBITDA now back to 1.9 million. So in the chart that Octavius showed you earlier, you will have seen the impact of our pivot to digital, our setting up the business for much faster growth. And you'll have seen that there was something like 7 million of investment in areas such as the people department, marketing, innovation, in order to set us up for this digital strategy. We're now starting to then see the drop down of revenue into profit and the impact of that coming through. So 1.9 million EBITDA, which is up 1.2 million on last year. You'll see that PBT is only up 0.6 million. The differential there is that we're now amortizing Performer, our one-to-one digital coaching platform, which Octavius will come to later. As ever, we continue to focus on operating efficiencies and CapEx efficiencies, and you can see that coming through in CapEx there. So CapEx spend down 0.6 million on last year. Some of that relates to office fit out costs that were in the prior year comparison, but 300,000 of that is the impact of a reorganization which integrated technology much better into the business and has actually sped it up quite considerably. So the benefit of OPEX and CapEx savings coming through in our numbers. We'll come back to the product roadmap later as well. And then finally, that strong balance sheet. So we have something like 5 million cash in the bank today. We're anticipating that cash will continue to build as we head towards the end of the year. And as Octavius mentioned, we do have a 10 million debt facility, which currently remains undrawn, should we for some reason need it. But at the moment, we're not anticipating that we would need that. So those are the core financials. Going down a little bit into more detail, the regional analysis, you can see there the impact of FX on the US business. So underlying growth is more like 4% in the US. The EMEA looks like it's a small decline. Actually, if you consider the sales organization, which is the clients that are run out of EMEA, the organization would actually be flat, but there are some of their revenues and a growing portion of their revenues that have been billed through the US because they had to be delivered in the US. But broadly speaking, slow to medium growth in our regions in line with our revenue numbers. What is, of course, quite interesting is that there's that growing FX impact, the differential between the US and EMEA, and that provides the opportunity that as we grow, some of our roles, particularly those in delivery and in other areas, can be then sourced out of the UK. And so that's an area which potentially provides the opportunity to leverage FX and improve profitability going forward. And that's something we're looking at. We have a very diverse client base. So we have 87% repeat revenue there from customers. That's a fairly normal number. It did peak a little bit up last year. What's very interesting is that we also have a diversified industrial base. So as we look at the economy and potential issues surrounding potential recession there are certain industries, particularly retail and similar industries, where we haven't necessarily been that strong in the past anyhow, which are going to suffer. But what we can do as a business is pivot very easily to other areas, and particularly ones where we're strong, such as financial services, pharmaceuticals, and some areas of technology. So that is a huge advantage for us. What we might see is that the largest accounts increases a little bit as we go forward, not a huge amount, but the impact of some of the frameworks that we'll be talking about later will change those numbers going forward a little bit. And finally, looking at product mix. Design and advisory is now back to normal levels at about 16%. That's what we've seen historically. So it's the prior year comparison was a little bit lower than normal. So nothing of particular interest there. One thing that is worth mentioning is the growth of in-person delivery. So our business, 70% almost of what we produce is delivery, which is live delivery. And historically, that used to be very heavily weighted towards in-person delivery. So before COVID, you'd have seen 70% of our delivery was in person and only 30% virtual. Obviously, through COVID, that changed quite dramatically, and there was almost no in-person delivery. We're seeing some return to that. And obviously the costs for that are a little bit higher, but from our perspective, it's actually a significant advantage for two reasons. One is financially, we actually make more profit for in-person delivery than we do for virtual delivery on a per session basis. So the gross margin percentage might be slightly lower, but the actual absolute profit per delivery is higher with in-person. So that's an advantage. It's also an advantage strategically because, as Octavius mentioned, we have nearly 400 coaches in 40 countries. That is something that our competitors will struggle to be able to do as well as us. So we have that ability to deliver live globally at scale. And whilst competitors might have found virtual delivery more easy to do, that is something that's an advantage to us. Going on to cash flow, you can see the impact there of trade and other receivables on the cash movement during the year, during the half year. That is the impact of primarily it's the growth in revenues from Q4 at the start of the period to Q2 at the end of the period. There's also some FX impact in there, and there's also some unusual timings within the quarter of monthly sales within the quarter. That has largely unwound already. It's not something we anticipate being a long-term change. Other working capital moments, you can see the impact of bonus there, which is the minus 1.6 million. And also you can see the spend on CapEx, which is actually lower than it was last year. So that's H1 FY23 closing position for cash. We would anticipate that growing from here to the end of the year. And as the receivables unwinds and as growth levels continue to increase in the second half. And with that, I'm going to hand back to Octavius, who's going to take you through some of the exciting framework agreements which are having a positive impact on our business.
Great, John. Thanks so much. And to emphasize Dom's point about our confidence in the future, we're delighted to share 3 new framework agreements. Now, historically, at MindGym, one account in the million plus range, we'd be cock-a-hoop about it. But now we'd like to share 3, and one which is many times larger than we had previously secured, which is with an energy company, is over 24 months and is worth in the region of £10 million. It's a very important program for them about culture change and about leadership development. It's global in its reach. And already we're seeing opportunities because they've been asking us to help in other areas linked to the leadership and culture, namely well-being, diversity and inclusion, and performance management. So this is a thrilling, even if it was just the only story to share, we'd be absolutely delighted about it, but it isn't. There are others too. We have just won for the second time an electronics games multinational. The first one was also a 7-figure deal. This new one we've just won is worth about $3 million over 2 years, and it gives us an enormous opportunity because it gets us into an adjacent business, and it also focuses on our ability to deliver at scale, quickly, really good quality. The third example is different again. It's a mining multinational, also our second mining multinational for a 7-figure amount. In this case, the issue is about bullying and harassment and inappropriate behavior at work. We have a very strong offer in the area of respect, and they have asked us to deliver this program globally quickly, including reaching far-flung places like Mongolia and parts of Indonesia. So our ability to deliver live, in-person, psychologically grounded, but very practical advice to address behavior, it applies across all three of these very different capacities. So hopefully that gives you an overview of what the business is today and how it's performing at the moment. But what is really exciting about MindGym, and why I think so many investors have chosen to commit to the business and stay so strongly with the business, is because of the opportunity that lies ahead. And so I wanted to share briefly our strategy, firstly by explaining how organizations buy the types of services that we offer at the moment. So on the left-hand side of the chart, you'll see what a typical enterprise organization has to deal with. They've got a whole range of different human capital and cultural priorities, and these are just a few of them. And for each of them, they'll have a whole range of different providers and suppliers, maybe a business school or two, a couple of consultancies, a behavioral change company like us, a learning provider, and so on and so forth. And as a result, there's an awful lot of noise going on in the system and a lack of coherence. So as the individual employee, I'm on the receiving end of an untold number of initiatives and programs, but I can't quite work out how they all fit together or what I'm supposed to do that's most important. Or maybe I get conflicting messages, where on the wellness program, I'm told to externalize problems, whereas on the growth mindset program, I'm told to internalize them. Well, which is it? And therefore, you have people who choose to opt out. You also have the risk of significant waste. Courageous conversations might be designed and run for a speak-up culture in ethics. It might also be used for account management of difficult clients, or it might be used as part of performance management, designed and redesigned slightly differently for different purposes, often different divisions and geographies each time. So not only is this ineffective, and not only is it costing more, but most seriously, there is no data. And therefore, it's almost impossible for organizations to know what is and isn't working and how to redirect investment. And it is completely impossible to mass customize, to give the right solution to the right person at the right time. As a result, the total is unequivocally less than the sum of the parts. Our vision, and a vision we share with many clients, and they're excited by this vision, is to make the total more than the sum of the parts. And the key word in this is integration. What we show on this chart here is integrating the different kinds of content. So what you learn as a manager is consistent with what you learn as a leader, is consistent with what you learn about behaving with integrity, is consistent with what you learn about how to look after your own well-being and that of others. And it all flows together, underpinned by core psychological principles. For example, we know that increasing someone's sense of autonomy, feeling in control, massively increases both their energy and commitment and performance, but also their well-being and their ability to accept others. So we can design an overall what we call a behavioral change platform or ecosystem that integrates the content, that integrates the distribution channels, and most importantly of all, is fueled by data. And that means that we can serve the right content to the right person at the right time, because on the platform of millions of people, there'll be thousands just like them. And we know what worked for those thousands, and therefore we're much better able to serve them with that content. So this is the vision of the future. And so instead of organizations spending all their budget on hundreds of providers, they spend hopefully less, because we can save them something by integrating with one or possibly two providers. And obviously, MindGym's ambition is to be one of those key suppliers. Now that comes both in the content and also in the distribution channels. So we've got the one-to-many in the top left around 11 o'clock, which we already deliver live one-to-many at scale, better than pretty much anyone else at a quality level out there in the market. We then launched our new one-to-one, which is really exciting, and I'll come to that in a bit more in a moment. Then there's On Demand, which is our digital library of e-workouts, which is constantly being improved. Diagnostics, which is a new area for us, and I'm going to come to that in just a moment. And nudges and clues and hints and toolkits that are in the flow of work. And again, we have a range of those now. And all of those will be fueled by data in the outer circle there, in order to each one benefits from the one before. So the results of my diagnostic may then give insight to the coach who's coaching me, who knows a bit more about what my needs are before we start, rather than having to start the conversation from scratch. And then their feedback on the session, or my feedback on the coaching session, then directs me to the right on-demand assets that I need right now. So the opportunity to create this is incredibly valuable, both for individuals and for companies. And throughout this, we'll continue to build and develop our relationships. We currently work with 64% of the FTSE 100, or have done recently, and with 54% of the S&P 100. So we have these very deep, strong relationships with many of the world's leading organizations. And that opens up the possibility of them, rather than buying from multiple providers, to buy from one they know, and one they trust. At the same time, we must continue to keep innovating. And therefore, we don't rest on our laurels and say, well, we've written these research papers on these topics. There are others that are on the way. We recently, 10 years ago, we wrote a white paper called The Reorganization Remedy, How to Upgrade When You Downsize. And given the current economic tailwinds, it may unfortunately be time to dust that down and refresh it. We've also got new white papers coming out on well working. Again, more of that in just a moment. So we think this is the right strategy, and we're pretty confident that it is, because firstly, clients say they want it. Secondly, from an investor perspective, it creates enormous long-term value. It's renewable. It gives greater access to new areas, because if clients create the content already from the ecosystem, why create it if there's a new topic go to somebody else? Why not bring in the people I've already got who are running successfully, and use more data to create more mass customization and more value? And then there's also significant barriers to entry, because once you're up and running and you're integrated into an organization, it's a very big lift to move to it, even if someone else comes up with the ecosystem, and to date, no one seems to be. Partly because in the market there, as I said before, by and large, the digital providers and all the live providers, but not the two together, and not certainly integrated at the personal level. So the question is one question is, what is the vision? And that is the vision, and that's what we believe is the colossal market opportunity. But then the next question is, how are we going to get there? And so therefore, I wanted to share a little bit of our product roadmap. And I'm going to go in more detail on the ones in green. But at the core of the first row are digitally enabled products, our one-to-one coaching, our diagnostics, and DXP, which is an internal name for digital user experience, but it's how we integrate the digital with the live. So there's a digital shadow that sits around the live event. So you have digital experience before you go that primes you, digital experience within the workout that creates more data, and a digital follow-up that's customized to you. And then our diagnostics will also move from organizational to individual, and it'll bring it all together and integrate it in the behavioral change platform that I mentioned just earlier. And at the same time, we're innovating in content. We launched a new research paper on leadership regained, why leaders are in a funk and how to get them out of it, which was very well received and contributed to our success with the energy company that I mentioned earlier, and there are more on the way. So I'm going to briefly talk about one of those, which is precision coaching, where there are a number of new platforms in the one-to-one coaching area, but we are the only one that's developed our proprietary methodology that's grounded in science, and that all our coaches are qualified to deliver. And we did this because what we discovered was, when you measure the impact of coaching, whilst people think that coaching has improved their performance by a whopping 76%, the mean is actually nearer to 3.4%. And many studies suggest there was no impact at all, and one or two even suggested that things got worse. But there are outliers, and so what we did was research what exists in the outliers, and we went to hundreds of different research studies, and just from that invented or created, using our team of psychologists and our academic board, precision coaching. And this is based on three parts above all else. One is solutions focused, which comes from solutions focused therapy, which is one of the most validated forms of psychotherapy, that focuses on the future. What does a right-sized goal look like, and what's a good enough outcome? I want my team to be engaged, but they're not going to be dancing down the streets or stopping strangers to say how brilliant my boss is. That's unrealistic. So what's a realistic goal to get to? The second, behaviour enablement, is the gap between knowing and doing. They're all things we intend to do. New Year's resolutions will be coming up shortly, and many of us will make those and probably not stick to them if the past is a good predictor of the future. But what we've got developed is psychological techniques that help bridge that gap, that greatly increase the chance that we'll apply what we know to be helpful. And the third area is mastery, getting really good at something before we move on to something else. And we've combined all these together to create a product which is called Performer, because it's all about improving performance. And it's based around 4 45-minute sessions that are run virtually with a precision coach qualified coach, and then has digital experiences before and after to help diagnose, remind, refresh. And when we've run this, we've found that on 32% of occasions, people received unsolicited feedback about how their behaviour had improved and their performance had changed, which is incredibly rare to get 3% of people giving unsolicited feedback. So we're absolutely thrilled about those results, and we're delighted the clients who have already bought it are buying more and more licenses. So that, again, is a very encouraging lead indicator. We can then compare and contrast it with the rest in the market. And again, we are the only one with the proprietary methodology, the only one with a coaching quality assurance that sits into it, and the only one that can integrate it into the rest of our solutions, the live workshops and the e-workouts, everything else, to create a fully blended program. The next thing I'm briefly going to touch on, which is new for us, we're still in beta trials for this, but really thrilling, is diagnostics. By and large, what happens at the moment is organizations bring in someone who's an expert in diagnostics, then they get some results, they go, oh my goodness, what do we do with that? And then they try and work out how to structure it and form it, then who they should bring in to potentially partner with them. They run an RFP process sometimes. They then choose someone, hopefully MindGym. We do a brilliant job, but by the time the job is done, the idea of evaluating the impact is long since gone. And it takes quite a long time to get that. With our new diagnostics, they're designed to be integrated with our solutions. And therefore, what clients will discover is insights that they can act on immediately. So the solution becomes part of the process, and then it's much easier to measure impact afterwards. So we think this is a significant change. It will redefine our relationship with many clients. It will make us more of a strategic partner, and it will be end-to-end for the value chain. At the moment, we've got one client who's bought it, and we're running beta trials with them. We've done a couple of other beta trials in the pipeline. And we expect this to have proven success in the coming year, FY24, and then be a more commercial success in FY25. And then going to talk briefly about our new IP in the area of well-being. Well-being is a $50 billion market at the moment, forecast to get to $100 billion by 2030. Organizations spend a lot in it because they know how important it is. If employees are flourishing and mentally and healthy and present, that adds enormous to productivity and performance. What they sometimes don't realize is that there are 3 factors that drive people's well-being. There's the personal factors. Maybe I'm born with a tendency towards clinical depression or developed early in life. There are all the factors that happen outside of work: what I eat, how much exercise I take, whether my sports team won or lost at the weekend, the status of my romantic relationship, how I'm getting on with my children if I have them, or my parents if they're around. And then there's the life at work. Is my boss a delight or an idiot? Do my colleagues undermine me or do they support me? Now, most investments take place at the borderline between life and work and life outside work. They're trying to nudge people to eat better and sleep better and so forth. And the research emphatically shows that this makes virtually, if any, difference. In one study, healthcare spending was the same for people who'd been through 18 months of wellbeing programs as those who had not. In another 2 years of wellbeing programs, the 5,000 people who did take part were no different from before on 78 out of 80 measures, including sleep and BMI and cortisol levels, as well as absenteeism, retention, and so on and so forth. So by and large, what's there probably isn't getting the results that organizations want. And what we've identified is the 5 psychological conditions that drive well-being. One of which, for example, is certainty. The more surprises I get at work, the mood of the boss that affects what happens that day, or the email saying, I need to speak to you tomorrow, and you have a sleepless night worrying about it, and then, in fact, it's nothing at all, through to a whole range of, is the business strategy changed, do my budgets get cut, and so on and so forth. So we help organizations think about how do you create those conditions that brings well-being into the flow of work. And this is a massive opportunity for us as a business and for our clients to get it right. And we'll be launching this white paper in the next quarter, our Q4, ready to deliver solutions in the next year, FY24. So in summary, we are feeling good for the year. Our outlook remains unchanged. There are some economic headwinds, notably the US at the moment, who are often the first to adjust when they think things are getting worse, but also the first to bounce back when things are getting better. We have won these significant framework agreements that give us much greater confidence about future growth. We are launching organizational diagnostics with our first clients, and we'll learn from that and grow from that. And we have brilliant new points of view in leadership, coaching, and well-being, which will fuel future growth. So we're really excited about this. We set out a strategy when we did the IPO in 2018. We're absolutely on track with that strategy. We are, with a slight disruption from COVID, on track with the growth that we were looking to deliver. And we feel very positive and excited about the business, and hope that you do too. And very delighted now to open up to any questions anyone might have.
That's great. Octavius, Dominic, thank you very much indeed for updating investors this morning. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of the screen. Just want to give the company a couple of moments just to look at the questions submitted already. I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessible via your Investor Meet Company dashboard. Octavius, Dominic, you've received a number of questions throughout today's meeting. So firstly, thank you to everybody for your engagement this morning. If I may, Octavius, can I hand back to you just to perhaps host that Q&A, and if I could ask you to read out the questions and of course where appropriate give responses, that'd be great.
Yes, certainly. Tom has asked, what's the current headcount in the business and how does that split between fully employed and contracted? And as you grow, what do you think you will need to add? Dom, do you want to start off with some guidance on that? And I'm happy to contribute.
Yeah, absolutely. So there are details on our headcount in our half-year results. We have something like 330 employees in the business. Now, that doesn't include our coaches, who are self-employed contractors. The contractors within that 330 are about 60 to 70. That number obviously moves around a little bit. You'll note that that is down a little bit on prior year. We have focused on OPEX efficiencies, and I think I touched on that a little bit earlier, which has reduced that number a little bit, but it's actually made our processes, particularly our technical side, a little bit more efficient and faster. Going forward, we will obviously need to grow headcount going forward. Perhaps a better way to answer that is to think about the drop down of our profits, of our revenues into profit, because most of our costs are headcounts anyhow. We anticipate on our core business that the drop down to profit is in excess of 30%, so something like 30 to 40% on our normal growth. But saying that, digital is of course likely to be significantly higher margin. Particularly, Performer will be stronger margin than that, we would anticipate. And then particularly things like e-workouts and pure digital, such as organizational diagnostics, the margins on that are going to be even higher going forward. So yes, we will continue to grow, but you should see leverage coming out from our numbers going forward.
Fantastic. Thanks, Dom, for sharing that. Someone's asked Mark about how long is the process for securing these large framework agreements and how are they structured? Let me come to the structure first. In our world, in our market, there are very few legally enforceable contracts of large tail delivery because the nature of the delivery can change significantly. So what happens is the client says, this is our challenge. Overall, what do you think it would cost? And we said, let's say £10 million. And they go, that's great. What we'll do is an overview framework to say, this is what we intend. And then we'll do statements of work for the individual pieces as they are delivered. So for example, the design of the program might be 2 or 3 million, and there might be statements of work for the different phases of that. Now, it is extremely unlikely they're going to spend 2 or 3 million designing a program and then not deliver it. And you can imagine internally there'll be quite a few questions asked if that were the case. So by and large, once they've designed and set up the upfront investment, the rest of the framework will be delivered. But it is a framework agreement, and therefore it's still open to question. We can't guarantee those earnings. Now, we also have SaaS products like our digital e-workouts, and those are obviously committed to upfront for an annualized basis. So that the process for securing them is, there tends to be, our average buying cycle is around 6 months. It can be a lot shorter, and obviously it can be a lot longer, but the typical is around 6 months. Quite a lot of work goes on in building relationships with CHROs, that's the head of HR, heads of learning, heads of diversity, heads of talent, as well as with CEOs and other business leaders, in order that they know about MindGym. So when the time comes, they invite us to contribute to the RFP process for a framework, and B, know a little bit about us before we show up. And as is the case with the energy company, where we had done a little bit of work before, we worked in one of their divisions doing safety at one stage. We also put effort into getting to know the key stakeholders across the business so that they invited us along. We were, in fact, seen as the black horse. So we didn't expect us to win because they had some big consultancies who were incumbents, but they were really impressed by the intellectual rigor of our thinking, the quality of our products, the innovation of the team, and the flexibility of the team, and therefore decided to award us the framework. The electronic games company that I mentioned actually was quite quick, because one of the things that was important to them was to deliver a lot of programs in a short period of time. And therefore our ability to have proven products that they could roll out immediately, and our client delivery team, which executes on them and makes sure they happen efficiently all over the world, made this a very appealing choice for them. And that happens slightly faster than the average. So hopefully that answers that question. You also asked the question, are regulation and corporate governance requirements on a company drivers for your business? Do you have offerings that address specific areas that enable companies to comply with their requirements? And the answer to that is a guarded yes. We wrote a research paper on ethics called The Only Way is Ethics, Why Good People Do Bad Things and How to Stop Us. And that has been the basis for programs with a number of banks on ethical behavior and how do you avoid ethical transgressions. And those programs have been commissioned because of issues with the regulator, who said that the culture is not set up for ethical behavior. Some of them have been fined for significant missteps, and therefore they're keen to change the ethical environment. And in one case, I'll give you an example from Data Bank, where the conduct survey was conducted 18 months after the MindGym program, and people were 7 or 8 percentage points more likely to say, for example, that they would follow the spirit of the law rather than the letter of the law if they had been on the program than if they had not. So you start to see a sustained impact on exactly the kind of behaviors that regulators care about, and there's definitely an opportunity for us to do more in this space. Moving on, Sam says, given the weakness of the share price, why have you not considered buying back shares in the company for cancellation? Well, you certainly have a very good point about the weakness of the share price, and we have clearly a range of views about where fair value might be. But one of the things that people have talked to us about is ensuring there's sufficient liquidity in the market. And 2/3 of the business is still owned by the founders, by me, by Seb, and by my wife Joanne, who's also non-exec. So there's only 1/3 that's already floated. If we started to buy that back, then the liquidity would become an even bigger issue. So we've taken advice on that, and the advice is to hold steady and let the market right itself. But that's the reason why we made that decision.
Can I jump in on that, Octavius?
Yes, please do, Don.
Yeah, so absolutely endorse what Octavius has said. What I would also say is that we're very much focused on our growth drivers, so on a digital growth. And if we want to move the share price, delivering on those, which we are doing at the moment, is the thing that we believe will most transform that share price. So that's our focus at the moment. And obviously, as Octavius said, we have considered this, but that's what we're focusing on.
James has asked, what's the planned investment into R&D, Dom, which I might pass to you, and then how do you protect your IP, which again you may want to cover?
Yeah, absolutely. So obviously, there's a limit to what we can say exactly about our R&D plans for the future. If you were to look at the market expectations are for our R&D capex spend to increase to about 8 million next year. And then that's from about 5 million this year. What I think I would say to that is that we are also internally always focused on that efficiency. So in the H1 of this year, you saw that the capex actually dropped versus prior year because of the efficiencies we've built into our organization. And of course, we're looking at different ways. You're always looking at other acquisitions we can find, which could be more cost effective, which certainly could get us to where we want to go more quickly. And we'll continue to look for those going forward. And there are other things you could consider doing, different org structures. You could look at offshoring. And again, these are all things that we continue to look at going forward.
Do you want to talk a bit about protecting IP?
And how do you protect your IP? Yes, so we are obviously we're quite rigorous about our IP and protecting where we can. We take the appropriate advice where we can. We have very clear contractual terms. We have contractual terms with our employees. I think that's that. You know,
Yeah.
Rigo, anything more to add to that?
I just add that what people are buying is the whole overall experience. So it is absolutely right. A coach could run one of our sessions, a contractor coach, and think that's really interesting content. I use it in my own training. But their own training won't be anything like the experience we've got. It won't have a digital before and after, and it won't be integrated into an overall program. So by and large, they may get a couple of snippets here and there, but it's unlikely that it's going to be mass produced and recycled in any significant way that would disrupt our business. We also have clients who are by and large multinationals or big domestic organizations. Again, reputationally, the idea they're going to take our IP and repurpose it and photocopy our handouts or whatever is unlikely because of the reputational damage it would do them. So we do have legal covers, but we also have found over the last 20 odd years that people haven't taken our IP or one or two exceptions when they tried to. We've been able to move quite quickly to prevent it. So hopefully that answers that question on IP. And does your outlook vary by region? And where do you see the best opportunities? I think we see the US as a massive growth market. It's an enormous market. It's relatively homogeneous, at least in the sense that everyone speaks the same language. And there are businesses that operate usually across most of the US rather than necessarily state by state. So there's enormous upside there. We also see the UK, which is our home market, has enormous potential for growth. So we're very excited about that. And we're also looking to Northern Europe, particularly to Holland, Netherlands, Denmark, possibly Scandi, as the first substantive beachhead outside the UK and Europe. We already operate in all those countries, as we do also in Switzerland. We operate in many more than that, but we see those as markets where we can particularly go after. So there is a variance in outlook by region. We think the economic headwinds in the US have been responded, as I mentioned earlier, more vigorously than they have so far in the UK, and that may unwind and go in the opposite direction. You also asked the question, do we expect to return to 20% annual revenue growth in the future now we're coming out of COVID? I mean, this year we're clearly still very much affected by COVID because Omicron in the November, December, January, February meant that it was hard to meet clients and sell to clients and do work with clients. So there was a tail effect in the first half of the year where growth was very much constrained, which we're coming out of in the second half of the year. We absolutely do expect to return to this level of growth as and when the digital products really take off, and we are confident that they will because of the market fit. When they do, we will be growing at a significant leg. So we feel very confident that growth will return. Quite how quickly it will return to that level is a little hard to tell, not least because of the economic headwinds that we are addressing at the moment.
Yeah, can I just add one point to that as well? If you were to look at the longer term growth potentials of our market, obviously there is strong underlying growth in our markets. You saw that, I think, on one of the first slides. What that didn't mention is that actually the digital elements of our markets are growing faster. And so if a business were to pivot to digital, you would anticipate that there's more growth there. I mean, it feels fairly obvious. I think one thing to point out as well is we do have a significant advantage. You know, there are players out there in digital who can do digital, but they don't have the IP that's necessary to do the broader market and to do the whole package for their clients. And then, of course, there are people out there who can do some of the IP, they've got some of the content, but they don't have anything like a digital strategy. And so to some degree, we are somewhat unique in that we have both more than 20 years legacy, all that content that Octavius introduced you to. We also have a very clear digital strategy, and therefore we can present that integrated package to our clients, which is hugely attractive, and then points to this digital growth being more relevant going forward as well.
Thanks, and that's great. And do you want to kick off on where can the EBIT margin get to in the medium term, given the operational leverage that you've mentioned?
Yeah, I'll talk about EBITDA margin if I may. So historically, we've had EBIT or EBITDA margins of around the 20% mark. There's no real reason why we can't go back to that. The more important question is what will digital do to those margins going forward? And obviously that depends on the size of the digital and mix of that business. So I'm not going to make predictions. What I would say is that you would anticipate, certainly things like organizational diagnostics, or individual diagnostics, or pure digital sales to have a much higher margin going forward. But we're not making predictions on that at this point.
And I think that brings to the end the delicious questions we've had. Thank you very much for asking those questions. If any more anyone wants to type in, please do.
That's great, Octavius and Dominic. Thank you very much indeed. And if any further questions do make themselves available, obviously we'll make those available to you post today's call. Octavius, I know, and Dominic, I know investor feedback will be particularly important to you both, and I'll shortly redirect investors on the call to give you their feedback. But I wonder, before doing so, if I may, Octavius, just ask you for a few closing comments to wrap up with, after which I'll send investors for their feedback.
Yes, thank you very much. And I'm delighted to talk about why I'm so excited about this business and why I, as the founder and majority shareholder, stay so committed to it. Because the market opportunity is vast, and the amount that's been poured into the human capital market from private equity and venture capital and other sources is enormous, because many others see this market opportunity as there. So it is highly likely in this large, growing, profitable, fragmented market that we will end up with some more dominant players. And we are pretty convinced that the solution, or one of the solutions that will become dominant, is the idea of the integrated behavioral change platform, where data drives practical, proven insights to the right person at the right time to affect the behavioral change that drives culture and performance in businesses. The question then is, who will become the leader? Who will become one of those? Will there be one dominant player like in search, or will there be several, 4 or 5, as I say, as there are in streaming channels? And again, that's impossible to know at this stage. But even if there are 4 or 5, each one will still have a very large and significant share. So that's the right direction. What I think is exciting about MindGym is why we are uniquely placed to achieve this. We're uniquely placed because of the IP that we have, both the ways of looking at challenges through a behavioral science lens, which is we are the only publicly quoted behavioral science company in the world, and also our ability to productize it. But as well as that, it's our ability to deliver live experiences at scale that are consistent, great quality. We've had over 4 million people go through them, so they're pretty much proven to work. And then on top of that, we've got the digital strategy that integrates live with digital. This is so important because broadly in the areas we talked about, people don't change their behavior, they don't change how they lead or how they innovate and so forth off the back of purely digital experiences. They tend to need a live human experience, and that is important, but of course they're necessary, not sufficient. You also need the digital follow-up in the moment to remind and guide and prompt. So you need to have the two integrated together. And we're one of the only companies that has this live scale delivery, one-to-many, one-to-one, and also the digital delivery. And with that data, that creates a unique market-winning proposition that allows people to transform lives all over the world and transform the performance of their companies. So we're really thrilled by the direction we're on. We've proven not only that we can deliver the growth in the business, but also that we can execute on our digital strategy, not least with Performer. And we're really excited about the future. Thank you for joining.
That's great. Octavius, Dominic, thank you once again for your time this morning. Ladies and gentlemen, please could I ask you not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of MindGym PLC, I'd like to thank you for attending today's presentation. I wish you all a very pleasant afternoon.